Welcome back to the deep dive. Today, we are strapping in for, well, a very turbulent week in recent pharmaceutical history. We're focusing squarely on Novo Nordisk.
hmm
For years, this is a company that has just reigned supreme, the powerhouse behind Ozempic and Wegovy, these seemingly invincible GLP-1 drugs.
They really did seem bulletproof. I mean, they were driving the entire Danish economy almost single-handedly.
Exactly. But what happened between November 17th and November 24th of 2025, it's really a masterclass in just how fragile a market leader can be.
It absolutely is. In just 7 days, that whole fortress just started to crumble.
Yeah.
The company's share price took this sharp, chaotic tumble,
Right, toward 52-week lows.
erasing billions in market value and, frankly, stunning investors all over the globe.
It was the definition of a perfect storm. So our mission today is to unpack the specific 1-2 punch that delivered this knockout blow. We're not talking about a slow decline here.
No, not at all.
We're talking about two separate, catastrophic pieces of news that hit almost at the same time. One hits their core business profitability, and the other just guts their future growth ambitions.
It's a fascinating and, frankly, painful case study. It shows how quickly investor sentiment can just flip when the narrative shifts from, unlimited growth to shrinking margins and serious pipeline risk.
Okay, so let's unpack that first piece of bad news. This one hit their cash register directly. We're starting on November 17th, 2025. Novo Nordisk confirms some pretty shocking financial news.
Steep, aggressive price cuts for Wegovy and Ozempic right here in the U.S.
It felt like a declaration of war.
And it was a brutal cut. I mean, it went far beyond what any analyst was expecting. For self-paying customers, and that's the key group here, the cash price was slashed by roughly 30%.
30%. So it went from nearly $500 a month down to $349.
Exactly. And they even threw in that temporary starter offer. I think it was $199 for the first couple of months.
That is just a drastic reduction, especially for drugs that have been selling at such a premium because they were so dominant. So what was the pressure? Why sacrifice so much immediate revenue? This feels like panic, not strategy.
I think panic is exactly what investors feared, even if the company's management tried to frame it as, a strategic necessity. They were fighting a war on multiple fronts.
Okay.
On one front, you had the policy pressure. Novo struck a deal with the U.S. administration, basically responding to all the political heat to lower costs and setting a maximum fair price.
So part of it was them trying to get ahead of the regulators, but the real knife fight is always the competition.
Absolutely. The second front was that intense rivalry with Eli Lilly, their drugs, Mounjaro and Zepbound.
Right.
The sources showed just how much ground Novo had lost. They shed about 9 percentage points of their market share globally over the past year.
9% is a huge number in this space.
It is. Lilly had just been faster and more aggressive with similar discounts for their cash-paying patients. Novo felt they had to catch up or, risk being shut out of that really critical underinsured patient pool.
So it sounds like Novo was late to the discounting game, and now they're trying to play catch-up with this massive price drop.
They are. And let's not forget the third front, the gray market.
The compounding pharmacies.
Exactly. Novo was also battling all this cheaper, unofficial semaglutide coming from compounding pharmacies all over the U.S. They can exploit these regulatory loopholes to sell chemically identical stuff at much lower prices.
Which puts huge downward pressure on Novo's legitimate sales. That context is crucial.
It meant the market was already being devalued, whether Novo liked it or not.
Okay, so this wasn't just about being a good corporate citizen. This was a defensive move to protect the future of their core franchise. How did Novo's management try to sell this bitter pill to their investors?
Well, they presented it as a strategic long-term play, basically trading near-term profit for massive volume.
The classic market expansion argument.
Right. Their calculation is that by making these drugs affordable out of pocket, they unlock this gigantic untapped market. We're talking millions of patients who don't have good insurance coverage for obesity treatments.
So the idea is get people in the door cheaply, and the sheer scale will eventually make up for the lower price per prescription.
That's the hope, that volume will eventually compensate. But, the market lives in the here and now.
So how did investors react to this signal of a brewing, margin-squeezing price war?
The reaction was swift, definitive, and very negative. The immediate fear on Wall Street was just simple arithmetic.
30% off the top means profits are going to bleed.
Exactly. Investors worried about massive profit erosion, margin compression. One analyst note said, lower prices inherently mean lower revenue per prescription.
And it's just
It's that simple. It squeezes those amazing GLP-1 margins they've been enjoying.
And Novo even confirmed those fears themselves by trimming their own guidance, didn't they?
They did. They had to. They immediately trimmed their 2025 sales growth forecast down to, I think, 8 to 11%.
Wow.
And that guidance downgraded, plus the realization that the glory days of easy high-margin sales were maybe over. It was so sharp that Zacks Investment Research just downgraded the stock to a sell.
And it's important to remember the stock was already under pressure heading into this week, so investors were already uneasy before the second shoe dropped.
That's a great point. The ground was already shaky.
Which brings us to that second dramatic blow, the scientific setback that hit the stock just a few days later. This shifts the focus from financial pressure to the really high-risk, high-reward world of pharmaceutical R&D. So what happened on November 24th?
This was the moment investors really understood the depth of the company's risk.
Yeah.
Novo Nordisk announced that its late-stage trials for oral semaglutide.
The active ingredient in Ozempic and Wegovy.
Right. The trials for that ingredient in treating Alzheimer's disease had failed.
They failed completely. I mean, given how much capital and hope was riding on that, that is just devastating news.
Completely. The company confirmed the trials showed no benefit over placebo. It did not slow the progression of the disease. And so they're discontinuing the studies.
Which effectively ends any hope that their flagship molecule could be repurposed for neurology.
That's right.
I think we need to pause here and explain why this specific trial was so important. Why was there so much hope that a diabetes and obesity drug could treat something like Alzheimer's?
That's where it gets really interesting. This wasn't Novo just, throwing darts at a board.
Right.
The hope came from the fact that GLP-1s, like semaglutide, are known to have significant anti-inflammatory and neuroprotective properties. There was strong biological evidence suggesting that improving metabolic health, so blood sugar, weight control, could potentially slow the cognitive decline that you see in Alzheimer's.
So the theory was it could maybe reduce brain inflammation or improve blood flow.
Exactly. So this trial was part of a major high-stakes strategy to leverage that potential and turn Novo Nordisk from just a metabolic health company into a major player in neurology.
And the failure just eliminates that future entirely.
It does. And the market reaction showed just how much future value investors had already priced into that potential success. Shares plunged immediately, something like 8 to 11% intraday.
Erasing billions more in market value.
Billions. This was viewed as a profound shock to their R&D prospects. Analysts pointed out that while this failure doesn't impact current sales of Ozempic or Wegovy, it crushes sentiment. Investors were assigning huge value to the potential success of this Alzheimer's project.
A multi-billion-dollar new revenue stream that just vanished. That failure has enormous implications. What does it mean for Novo's R&D strategy going forward?
It really underscores the limits of semaglutide. They poured massive resources into this high-risk project, and its failure means a huge potential therapeutic area is now gone for their core molecule.
Which leaves the company far more reliant on its core obesity and diabetes franchise.
The very same franchise that is now facing unprecedented pricing pressure.
It's a double whammy.
For investors, it just eroded confidence in the company's ability to successfully diversify their R&D pipeline. They now have to prove their next generation of innovation is robust.
So if we connect this to the bigger picture, you now have a stock that's been hit by two completely different but equally damaging pieces of news.
Right.
Squeezed profit margins on its core business and a total failure in its key expansion ambition all in 1 week.
Exactly. This is the synthesis point. This is the perfect storm. It materialized because these two events hit a stock that was already, as we said, significantly vulnerable.
So tell us more about that existing vulnerability.
Well, they were already dealing with slowing growth. They'd had repeated guidance downgrades throughout the year. But more dramatically, the company was going through some serious internal upheaval.
Like the cost-cutting measure.
Aggressive cost-cutting. Back in September, they announced a plan to lay off approximately 9,000 employees globally.
9,000 layoffs.
Yeah.
That sounds paradoxical for a company that was seemingly on top of the world.
It signals deep anxiety about future profitability. If a dominant company is announcing massive layoffs, it suggests the internal pressure and slowing growth expectations were already severe.
Plus, there was a CEO change.
Right. A new CEO took over in August 2025. That new leadership team basically inherited a ticking time bomb and then just watched it explode in November.
So the immediate response from investors wasn't just to react to the news, but to completely reset the baseline for what they expect this company to be.
Yes. The investor mindset now is all about rebasing expectations. They've completely reset their outlook for growth and for risk, which is why the stock is trading near its lowest levels in years. I think it's down something like 58% from its peak a year earlier.
Wow.
Investors are signaling that the company's golden goose, the GLP-1 franchise, is going to be far less profitable in the future, and their R&D pipeline is way riskier than they previously thought.
Which raises an important question for you, the listener. What are the forward challenges now facing Novo Nordisk? What do they have to prove next?
I think they're facing three immediate critical challenges. First, is the commercial gamble going to work?
Will that 30% price cut actually generate enough new prescriptions to make up for the lower revenue?
Exactly. If the volume doesn't materialize, they've just slashed their own profits for nothing.
That's the core risk. What about that rivalry with Lilly?
Second, can Novo maintain market leadership against Eli Lilly, which is gaining ground so fast with Zepbound, without sacrificing even more margin? Every discount puts them closer to a commodity price war.
And the third challenge.
Critically, after the Alzheimer's debacle, how are they going to rebuild confidence in their R&D pipeline? They need a strategy to diversify beyond metabolic diseases that actually works this time. Until there are positive answers to those questions, market sentiment is likely to stay very, very cautious.
So, to reiterate the key conclusion here, the sharp slide in the share price was caused by that combination, a huge clinical disappointment,
The Alzheimer's failure.
and escalating competitive and pricing pressures hitting almost at the same time. One was a scientific reality check, the other was a commercial inevitability, and together they delivered a blow that wiped out billions.
That's the core takeaway. It's a classic example of how external market factors and internal pipeline risk can just amplify each other, especially against a backdrop of existing vulnerability.
And now they're forced into this massive gamble on market expansion.
A gamble they have to make because that other high-growth R&D pathway just slams shut.
And that gamble presents a colossal risk for investors to weigh for a company that was, until recently, seen as totally dominant.
Absolutely. And this is the central risk I think investors have to weigh now. Novo Nordisk's entire strategic outlook now hinges on executing this volume play. So what happens to the company's valuation if the higher volume they're projecting fails to materialize?
They're left with lower prices and flat growth.
Or even declining growth? That outcome would completely redefine the company's value proposition.
That is a fascinating and crucial thought to leave with, especially for a stock that was once deemed pretty much untouchable. Thank you for guiding us through this deep dive.
My pleasure.
We hope this provided you with the insight to understand the mechanics of this stock decline and the high-stakes commercial warfare really defining the pharmaceutical landscape right now. Join us next time for another deep dive.